I'm going to turn this up the yard. It's a little bit easier for everybody. Good morning. Hope everybody's doing well. We're going to recover what's happening right here in the crypto markets. Obviously, you know what's going down here on Monday morning, January 9th. Let's get into the on-chain metrics. The on-chain metrics for Bitcoin. Bitcoin's currently trading at $17,382.10. That's leaving its on-chain metrics at 37% of the folks out of the money, 10% at the money. 50% of all Bitcoin token holders are currently in the money. So that's a little bit higher, obviously, than when we started the first of the year. Currently, 72% of all Bitcoin holders have held that token for over a year. 21% have held it for 1 to 12 months, and 7% have now held Bitcoin for at least 1 month, buying back in December after the January capitulation event. If you want to characterize it by that. The Ethereum metrics are relatively similar, obviously. And you can find out all these daily metrics releases in short TikTok videos on the TikTok channel, CryptoCast Leverage. So you can check those out if you're ever looking for like what the daily is. You also can find them here on YouTube on the shorts. Ethereum currently trading right now at 1,343. Obviously, we broke that critical 1,300 liquidity pool area. Again, depending on what exchange you're on, that's where you're going to, your exchange fee may be a little bit higher or a little bit lower. So you always got to remember those things. At that level, 43% are still out of the money for Ethereum. 3% of all token holders are at the money now. 54% of Ethereum token holders are currently now in the money, which is a nice 3% jump, 4% jump, okay, in the last 4 days, so over the weekend. You've got 69% of folks have held Ethereum for over a year. 27 have held it for at least 1 month to 12 months, and 4% have held it for at least 30 days. So they bought, obviously, after December 9th, today being January 9th. So really quickly, quick update here. Fueling a lot of what's happening here. A lot of it's transactional activity. Some of it could be a squeeze. Some of it could be, this could be a little bit of rise before we retest again. A lot of people have called for that. And then it's third week of January, a big sell-off in the third week of January. And so you also have to, be aware of that. But Ethereum transactions were 338% higher in 2022. So that's growth, mates. We can talk about all the other assets, the other chains like Polygon, Matic, Binance, Solana, Algorand, Cardano. We can talk about all that stuff, right? But at the end of the day, Bitcoin and Ethereum are still the top dogs, and everybody's breaking themselves. If you're an altcoin in DeFi or any of that, you're going to break yourself against Ethereum. Everyone pretty much breaks themselves against Bitcoin. Still, and people can say whatever they want about Bitcoin dominance and all that. I'm not so sure that's even relevant anymore in 2023, to be honest. If you follow this channel for more than a blink, you know that I'm not really been a Bitcoin dominance guy. I am a Bitcoin correlation guy. How assets are correlated to Bitcoin and Ethereum matters. If you look today, what you're experiencing today in the market, mates, is you are watching a reaction in the market to Bitcoin and Ethereum. Okay, that's what you're watching. So what you're learning here is, what are the assets going to be that are going to quickly recover in price? That's the question you should be asking yourself. Again, not financial advice, not your financial advisor. Okay, you should be asking yourself, what's Matic going to be in 2024? Right? That's not the right question. The question is, how quickly is Matic going to recover in value to its all-time high of the last bull market? That's the question you should be asking. That's how your technical guys are going to chart their Fibonacci's. Okay? That's what they're going to do. Is they're going to look and they're going to show you, and you're going to have those guys that specialize in that technical aspect go on YouTube and talk about this coin could go from X to Y Why can it go to Y? Because it got as high as that during the last cycle, right? And so they use that with their Fibonacci levels in terms of the potential. So should you put money in this or should you put money in that? Like what's potentially the higher, greater return? Technically speaking, does not mean that it always happens that way, because a lot of times you're going to get new assets. You're about ready to get you're about ready to get a bunch of new assets, okay, being dumped into the 20 plus thousand pool of crypto assets in the next 30 to 60 days. And so what's their impact going to be on the market, right? You just saw Bonk with Solana, okay? And what did that do for Solana's token price, mates? Again, everyone bought into the narrative that Solana is FTX. It's not true. That is a generated narrative yarn by crypto influencers during the wintertime because it's a bear market. Why are they so focused on Sam Bankman-Fried? Why are they so focused on FTX on YouTube? Because they're not trading, mates. It's a bear market. So remember, go back a year ago and look at December, January of 2020, 2021, and 2022. What were they talking about? They were talking about gems to a million. They were talking about, altcoins that were going to explode. They were talking about all of these things. They weren't talking about the scandal, like the whatever, events of the day that were kind of like this crypto or what was going to happen again with Gox and what was going to happen with all that Bitcoin that's law. They weren't really, that was like, okay, they didn't really want to talk about that, right? Because that would put a damper on the bull market. They didn't want anything to jeopardize crypto, like the perception of crypto, right? Well, they've thrown that out the window, okay? And that's how you know that they're not legit, okay? Because why are people listening to them? Like they're now just news generating from the mainstream media all of a sudden because they're not trading. It's a bear market. So they're not getting these crazy moons and they're not getting these, all this stuff and pumps and stuff other than today. Today's obviously a great day in crypto. But they haven't been getting them since November, since the FTX, right? So they got to play the blame game because they put all these people in these currencies, okay? They put all these people in these projects that have gone under, that have been moving their money around with each other, okay? Right? And the YouTube influencers call them like the cabal or the crypto cartel or the crypto cabal, but they all invested in them. They all contacted with them. They interviewed them. They were in cohorts with them, okay? They're part of the cabal too. Don't let anybody kid you. They can backpedal all they want or come out like the people's champ, okay, all that. But the reality is they were out pitching those projects for the last 12 to 24 months during the bull market. They were, okay? They didn't do their due diligence. They didn't. They were handed copy and they were paid to promote things like Voyager and Celsius and all in one matter or another, okay? And altcoin projects and, that's the game and people understand it that know, the game. That's why Ben Armstrong went after that young lady who happened to also have a media sheet. Well, why do you have a media sheet? Well, you have a media sheet because you're charging for your services to projects to promote them. And those are your rates, okay? There's nothing wrong with that. Nothing wrong with that. But it's disingenuous now to attack like the major public crypto publishing sites, right? Who do the same thing. You can pay to have your project promoted on their page, different. I'm not sure how each of them individually work, but you know the major websites for crypto news, okay? And so now they're trying to throw shade on them like they're different than they are. They're the same thing. They're part of the same. They're part of the same industry. Okay, it's called promotion. And so how did all these sites and companies stay afloat throughout the bull market, right? I mean, when's the last time you've seen Ben Armstrong talk about actual trading? He doesn't talk about trading. He's not a financial advisor. But people think that he is. I mean, because they'll follow what he says. And you know what I'm saying? And that's his shtick, and I got no truck with that. But But I'm just saying, like, he's not a trader. So he's not a technical analyst. He's not a trader. He even stated back in November, I think around the November like 23rd or something, that he only owed two cryptos. He only owned 2 cryptocurrencies. So either he's a maximus, right? Or what? He doesn't have faith in crypto. Okay? And so you got to remember that. Listen to the subtle cues. Okay? Not a technical trader, not a daily trader, not a an analyst. Okay? So again, where's the value there? It's news. So he's a crypto news driver. He is a market driver via the news. This ain't no different than what in the United States, MSNBC, CNN, Fox, they are news drivers a lot of times politically to move people onto something or away from something, right? And so that's just something interesting that you want to keep, that you want to keep an eye on. So now CryptoCast, I will do video. I will do crypto bubbles today. I will also do the CryptoCast call sheet. And you can take a look at that. But let's look at some of these numbers here. Just since January 1st, mates, for the call sheet. Okay. Bitcoin, January 1st, 16,512. It's now 17,000. Let's tell you what. We'll refresh this and get some current valuations for the call sheet. So we're at 17,340 currently trading. Okay, that's a 5% return. So if you bought Bitcoin on January 1st, you're up 5%. Ethereum, 1,194. Okay, it's currently 1333. That's up 11.7%. All right. Just since, again, mates, just since January 1st. Okay. Litecoin. Let me talk about this to you, mates. Something I really, really want you guys to think about. Not only whether or not you're in any of the trading discords you're in, does not matter whether you follow this channel or subscribe to this channel. I really want you to start looking at your correlated crypto asset. And what do we mean by that? Every cryptocurrency known to man, ultimately, at the end of the day, breaks itself against Bitcoin and Ethereum. They're the top dogs. That's just the truth. No matter what camp you're in, doesn't matter what army you're in, what community you're in. There are literally hundreds of great projects in crypto right now in blockchain development. No argument. And a lot of those are going to absolutely appreciate in value because of the value and the service and the solution that they provide. Okay? No doubt. I have no doubt at all. Okay? So this is not a knock on those communities and those armies at all. But the reality of it is everyone, including the institution in the street, is going to look at those assets through the lens of breaking them against Bitcoin and Ethereum. You're not going to see altcoin, you'll see altcoin season again in the next bull market. When the reality is all in a bear market, you're not going to see that. All eyes are going to be on Bitcoin and Ethereum and what they do. And that's just the legitimate aspect of that. So how are those assets that are correlated to Bitcoin actually doing since January 1st, right? And that's where I really want to get people in the group and people who follow me on YouTube to understand that you want to look where assets are going to be in terms of this recovery. Which assets are going to recover the quickest? That's what you should concern yourself about. Not what asset is going to win and what asset is good. Is Cardano going to be the blockchain? Is Matic going to be the blockchain? That stuff is a great debate. But if you're looking for where, in terms of what project, you want to look at first, okay, which ones are going to recover in value the quickest when this turns around? Again, we're in a bear market, right? And so that's where you want to position yourself. And so what I've said all along and all for the last 3-4 years, I've said to people, like, never buy a crypto asset when the RSI is above 70 on the 4-hour. Never sell your crypto when the RSI is below 30. Okay? When everybody else is selling, you don't want to be selling. You want to be buying when it's below an RSI of 30. When everybody else is buying above 70, when it's already overbought, that's when you may want to take when you decide, that's where you want to take off your Bitcoin. You don't want to be waiting to sell your Bitcoin or selling your Ethereum or any crypto asset when the entire street is selling it and taking it down below an RSI of 20 and 15. Think about this. There are times when Ethereum has gotten below an RSI of 22. That is it. And look where it is now. Again, we're up 11.56% in 9 days, simply from the call on of 11,194 on January 1st. Very simple. Arbitrary date, mates, on the call sheet. The arbitrary date is January 1st. So that's not even a technical trade. Ethereum could have actually been cheaper than that at some point on January 1st. Okay? So when you look at the crypto call sheet, understand that everything is based on January 1st, buying that asset on the first day of the year. Okay? Valuing the project, knowing its potential, and its potential to recover in value faster. Okay, because it's highly correlated to Bitcoin and Ethereum. Because you're not going to see an asset, you're not going to see in a bear market an asset skyrocket, stay above an RSI of 70, continue to go up and up and up and up and up every day during a bear market while Bitcoin and Ethereum aren't. You're not going to see that. Okay, you can see a daily pump. We saw that, right? We've already seen that a few times since November. Okay, and then they've sold right back down. Okay. So you want to pay attention to that. So you look at the correlated assets to Bitcoin. You know me. I'm going to tell you, if you've been following this channel, Litecoin, Bitcoin Cash are your two ones to track with Bitcoin. Why? Well, Litecoin today is trading at $82. Okay? The call on January 1st was $69.40. That's 18%. If you bought Litecoin on January 1st, you're up 18%. 9 days, you're up in a bear market, you're up 18%. Bitcoin Cash, 96 on January 1st. Again, it's now 107, 11%. You made in a bear market, you made 11% in 9 days. Okay? Now, these have all gone up today substantially, so you can expect profit taking to get taken because they're blowing their charts out. They're blowing their 7-day and 21-day moving averages, okay? Which makes them great, again, not financial advice, makes them great trades for leverage traders who are actively trading in the market today, okay, on leverage, low leverage, 3x, 5x, and some guys I know are on a 10x this morning, okay, and things like Quant, okay, Quant was 104.90 on January 1st. It's currently 122.23. That's a 16% rate of return, okay, 16% rate of return in 9 days, okay? That's not even the biggest one, mate. Maker was $506 on January 1st. It's currently $633.35. That's a 25% return in 9 days. Okay? Phantom, 22%. Cardano is up almost 29%. That's up to 31 cents from 24 cents. Aptos, APT, 48%. Okay? In 9 days, mates. 9 days. Okay? And this is what I'm talking about. So you want to look at your correlated assets, which are going to be your Litecoin, Ethereum Classic. Highly correlated to Ethereum, right? I've said this for 2 years. Again, it's nothing, and I get a lot of people will come at me and be like, "Oh, if nobody uses it, I don't really care." It's not about transactional activity with Ethereum Classic. It's about the fact that it's part of Ethereum, okay? Family, siblings, right? Like all forks. However you want to break it down, right? It's correlated to Ethereum. So Ethereum Classic was $15.50 on January 1st. It's now $20.75. That's a 33.87% return on spot in 9 days. If you were 3x or 5x in that trade on leverage, that's where folks are making the big money. Okay? And again, even in a bear market, Solana left for dead at $9.40 2 weeks ago when we talked about Solana. It's currently $16.44, mates. 68% return since January 1st. Okay? So that's a simple update on what's happening. On-chain metrics for Bitcoin, on-chain metrics for Ethereum. You can find those on TikTok. You can also find them on the shorts on this channel. I'll try to update those daily so everybody kind of knows what's happening on the blockchain. Again, all of this transactional activity, exchange flows, everything that you need to use that's going to make you a better trader and unlock your trading potential in 2023, 2024 is on the blockchain, mates. The metrics and the data are out there. Forget about the noise, okay, of YouTubers, okay, that are just commentators, okay? They're not traders, all right? What the blockchain is going to communicate to you is just like I said earlier, Ethereum up 338% in transactional activity in 2022 over 2021. I don't care. Any business that's up 330% is going to go up in value, okay? Again, and so you want to use these metrics, but also pay attention to your exchange flows. Understand that if people begin to move these asset tokens to the exchange here in the next 24 to 48 hours at these levels, their intentionality is to sell. And if their intentionality is to sell, you're going to see profit taking and you're going to see the price of these assets come down. And that's when you would go ahead and hedge or sell short the market when you see the exchange flows reach critical levels, or critical mass is what we say, when it's basically busted through its historic daily average, because more people are moving their tokens to exchanges to liquidate, okay? And so you want to watch that a lot, because that's going to give you the indication before it happens, okay, that it's about ready to happen, all right? And that's, I mean, that's one of the easiest ones to use. When are people going to sell? You've got your in and out of the money flow. You know what the liquidity pools are. If you don't have any, if you're unsure about all that those kinds of things, you can reach out to me. And you know, you can hit me up, message on TikTok, or you can send me an email, mycryptoballers at gmail.com. And I could just kind of give you a little quick rundown or get on a call with you to explain what that really means when you extrapolate the data from the blockchain and you put it on your chart. You know where the liquidity right now, Bitcoin is in the middle of a liquidity pool at 17,300. Between 17,300 and 17,500, there is a lot of activity, a lot of people buying and selling. It becomes a pool, right? A barrier. If it breaks through that barrier, then that's bullish, and it's going to test 18,000. If it breaks through 17,500, it's going to be on to 18,200, okay, to test that level, all right? But it has to hold the level throughout the day. And so that's what you really, really want to follow and keep an eye on, mates. And that's really it. It's not that complicated. It really isn't. Once you get your metrics dialed in, you understand what you're looking at and what you're looking for, it's relatively easy to understand what, like this morning, all you had to tell me what Bitcoin and Ethereum was doing, and I could have told you what Litecoin, Bitcoin Cash, Quant, Cosmos, Polygon, Cardano, Matic were going to be doing. Okay? Now, their correlations are all different, okay? But they're still highly correlated to Ethereum and Bitcoin, okay? And so you kind of want to watch that. No other highlight. Phantom highlight up 22%. Chainlink up 12%, Cosmos 18%, Solana 68%. You know, so look, do you see that? You want to have a basket of these, mates. Again, not financial advice. But if you're just in Bitcoin and Ethereum and that's it, maybe you're using Cash App, maybe you're using PayPal, maybe you're using any other easy service, which is fine. But understand that, again, today alone, Bitcoin's up 4.95%, Ethereum, I'm sorry, for the year, Bitcoin's up 5%, Ethereum's up 12%, right? But now if you look at Litecoin, Ethereum Classic, Solana, Maker, Cosmos, they're up 2 and 3 times that. Okay, so you want to create like a little basket, and that's what the call sheet's for. That's to help people, okay, to understand that you should be buying some of these assets when they're falling below a falling RSI level on their 4-hour, when you can get them when most people are selling them, because your plan is a longer term next bull market, okay? In terms of that's what you should be thinking about if you're spot trading. You shouldn't be thinking about buying Bitcoin today to sell tomorrow spot. If you're going to do that, then just do it on leverage. Don't buy it on spot. Just do it on a leverage exchange, okay? I mean, if you're going to do that, I mean, that's, again, not financial advice, but that you're going to pay in fees and all that for spot trading. You know what I mean? Leverage your trade. I mean, if you're that confident it's going to go up in a day or two, but if you're a spot trader, you want to hold these assets for the next bull run, late 2024. So you want to keep adding to them as the market, you know, because you have confidence in those projects, okay? And you believe in those projects. And they're in the top 25 or top 100 market cap. So the majority of people are optimistic about those projects, right? And so, you know, so you want to just create a little pool until we get more ETFs, until we get more mutual fund type exposure, which we may not get in the US with their regulations, that will allow you to do it a basket of crypto assets in a fund, that's not a crypto fund. It's run by a major house. You've got some of the firms now have that capability, so you want to look into that. Talk to your financial advisor and find out Fidelity and find out what that's safer necessarily to put money into on a monthly basis, maybe long term for crypto, as opposed to again, the other side of the fence, us guys trading. Okay, there's investing and there's trading. Okay, you can do both. Okay, spot is investing. Okay, leverage is trading, in my opinion. Far too many people buy on spot and try to day trade Bitcoin. Okay, in the end of the day, it rarely works out for folks. Okay, unless you're in a bull market where everything's going up and up and up every single day. Okay, but in a bear market, it doesn't really work that way. And so again, that's why you see volume down in a bear market. You don't see a lot of that, a lot of those groups doing massive pump schemes and massive things that you saw, back in 2021 and 2022. They've just kind of all died off because the market's not going to reward them quickly because we're not in a bull market. All right, mates.